What's up YouTube, Nolan here. Today guys, I'm going to be talking about the three most ominous words for us investors. Stock market crash. Now let me be clear, especially for our new investors. There is a stock market crash on the way, guys. There is a stock market crash on the way. Now I don't know when this crash is going to happen, but history has shown that these crashes and these corrections are part of the market cycle. Now, before you call foul and think that this is clickbait, I want to give you here at the beginning of the video, before I give you those stocks that I would buy, or at least that I'm looking at buying for when we get this next correction, I want to give you three signs that are pointing to a stock market crash in the near future. And we're talking about like any day. All right, so first of all, over the last 60 years, no rebound has been as smooth as the rebound from the COVID-19 stock market crash. The last 8 bear markets, if we look at the last 8, not counting the COVID crash of 2020, all right, if we look at the last 8, in the 3 years that followed that crash, the previous 8 crashes, there was either 1 or 2 drops of 10% or more in the market after the bottom. In other words, it was going up and then it would crash back down 10% or more. And what that means for us is that recoveries are a process, guys. These recoveries from these bear markets, from these stock market crashes, it's a process. It's not a constant uptrend like what we've seen in the last 15 months. We are due for correction. Now, the second thing that's really got my attention is the S&P 500's Shiller price to earnings ratio. What this does is it examines inflation adjusted earnings over the last 10 years. Now, on Monday, the Shiller PE was 37.5. That's 123% higher, guys, than the 151-year average. The last 4 times that the Shiller PE was sustained above 30, we saw drops in the stock market of 20%. Again, guys, history is warning us there's a correction coming. There's a market crash on its way. Now, before you think that I'm just a bearer of bad news, then just keep watching, guys. I'm going to tell you why this is going to be good news for us as investors. Now, there's one other sign that's pointing towards a stock market crash, and that is we have a historical use of margin right now in the market. The margin debt in May 2021 was up to $862 billion. That's up 60% from last year. And the last 2 times that margin was this high, you know what they were? The dot-com bubble and the Great Recession. That's right. And both of those saw a market drop of over 50%. Now, all these signs are saying that the market is about to crash or that it's about to correct steeply. And if I had to put my money on it, I would say it's going to happen, guys. The market is about to crash. And I know that sounds a little bit unnerving, and some of y'all maybe have already clicked off the video like, this guy is just bearer of bad news, like you're not even here listening to me right now. But it's actually an opportunity, guys, for us as investors, because here's the thing about crashes. Crashes usually are short-lived. And every single time throughout the history of the stock market, every single time that we saw a stock market crash, those crashes were erased by the bull market that followed. Now, so we have to look at this as an opportunity to buy great companies at a discount. And that's a perspective that I'm taking, guys. That's the perspective that I want to look at as an investor, is that when these stock markets, these crashes happen, when things drop down, this is opportunities for us to get some good deals. All right, so I'm going to give you 3 stocks now that I'm looking at buying when the next stock market does crash, or when the next stock market crash happens. And I do want to note here that I don't own any of these companies right now personally, as of the making of this video. If you do want to see some stocks that I do own, check out Stock of the Week. Happens every Tuesday at noon Central Time. All right, let's look at the first stock that I've got on my radar that I'm looking at buying for the next stock market crash. And number one is Alphabet. Alphabet. So the ticker is GOOGL or GOOG. And for some of y'all, you are thinking this is weird to invest in a company that relies on advertising during a recession. Well, Alphabet is the type of dominant company that you want during hard times. And I'm going to give you two factors for why Alphabet is a good buy. First of all, crashes are short-lived, and I said that a minute ago. Crashes are short-lived. The market goes back up. Economic growth happens over a much longer time frame. We're talking about years to a decade. Crashes don't take that much time. These corrections, they're very short-lived, but economic growth is a lot longer. So what Alphabet can do, since they're a mega player, since they're a huge company, is they can hunker down during these times, and they have done this historically, and then they can expand with double-digit growth during the upswings as ad pricing soars on Google's internet platform. Now, Google, you have to understand, has 91 to 93% of global internet search share over the last 2 years. So Google is a dominant figure in the Google search industry. Or I'm sorry, in the internet search industry. Now, the second factor that's got me kind of looking at Alphabet is they are an innovator. YouTube is owned by Alphabet, and it's now in the top 3. It's in the top 3 visited social sites worldwide. Also, their cloud infrastructure services, Google Cloud is growing at 50% year over year, and that should continue, analysts are saying, through 2025. So Google, Alphabet is great company. That's something that I'm looking at buying when we see this next market crash, and I'm going to get it at a discount. All right, the second one that I'm kind of looking at right now is United Health Group. United Health, and the ticker for that is UNH. Healthcare stocks are great to invest in during crashes. The healthcare sector is defensive, and what that means is it doesn't matter if the economy is doing poorly or if it's doing amazing. People still get sick. People still need medical attention. People still have to go to the doctor. People are still going to go to their appointments. They may not be going to the movies, but they're going to be going to the doctor when they get sick. So, healthcare stocks are great. It's a great industry to be in during market crashes. And only a few stocks, and this is free, guys, okay? Only a few stocks have given a positive return every single year since the Great Recession. Okay, there's only a small handful, and United Health is one of them. One of those companies. And it's because their health benefits segment is huge. And what they're doing is they're providing health insurance, and this health insurance is giving them predictable cash flows and premium pricing power. And of course, the Affordable Care Act does limit their premium pricing power a little bit, but they still are bringing in more than enough new members to be profitable. And another big driver, guys, for United Health is their healthcare services subsidiary, I can talk, and that is Optum, which provides everything from pharmacy benefit manager services to data analytics, which are used by hospitals and other health-focused organizations. Optum, guys, is actually United Health's their faster growing segment out of their segments. So before we talk about that last stock, because I want to tell you my last one. So we've got Alphabet, we've got United Health. These two are major on my radar, and I may not wait until the stock market crash to buy them, but I'm thinking when we do see that crash, I just may have to buy in. But before we talk about that last stock, I want to tell you we're doing a giveaway on the channel to celebrate when we hit 250 subs. So if you want to be part of that giveaway, if you want to have a chance of winning $50, all you got to do is make sure you like this video, comment down below, and make sure that you are a subscriber to our investing community. All right, also guys, if you want some free money right now, Webull, Robinhood, sign up for them. Links are in the description. I know your friends have been telling you about them. and they're just really good apps. I have both of them. I use them, and they're good apps. They're free, and it's a good thing to get started with. All right, the third stock that I want to that I'm looking at for this stock market crash is Salesforce. Salesforce, and the ticker for that is CRM. And what Salesforce does is they offer cloud-based customer relationship management software, and really the symbol CRM stands for that, customer relationship management. And what I love Salesforce because they stole the ticker for the entire industry, for the whole segment. And what they do is they use this software that Salesforce is making to store customer information, to handle products or service complaints, to manage online marketing campaigns. And it also offers predictive sales analysis in real time. So this is a powerful software done by Salesforce. And through 2025, this segment's revenue is projected to grow by double digits annually. Just the whole segment of the industry. And I think that Salesforce is going to grow even faster than that through 2025. I love their CEO Mark Benioff. He thinks that their full year sales will go from $21.3 billion, which that's what it is currently. He thinks it'll go from 21.3 to $50 billion by 2026. So Salesforce, and get this, Salesforce, they own kind of a little bit of a monopoly. They own 20% of market share in what they do. But they have, watch this, they have more than the four closest competitors under them. So number 2, 3, and 4 below them, they have more market share than 2, 3, and 4 combined. So they're a superpower in the industry, and I think that you can see that even in their ticker by just taking the whole industry brand, customer relationship management, CRM, that's their ticker, and they're destroying. They also have a deal to acquire Slack Technologies, which you may have heard of. They want to buy that for $27.7. The deal's already in the works. It's already, I think it's already ready to go. They're just waiting for approval. But $27.7 billion is what they're buying Slack Technologies for, and I think that's going to greatly expand their potential as a company. So I'm betting, guys, on these three companies. So Alphabet, is it Health Group, United Health, and also Salesforce. Those three companies, guys, those are what I'm betting on. They're not going to be phased by the upcoming market crash. So get ready for some great deals for when this crash does happen, and you can get these great companies for a cheaper price. But anyway, guys, I hope you enjoyed the video. Thanks for watching. You'll have an awesome week. Remember to dream big, and I'll see you in the next video.